Hi, everyone. I'm Kalilah Reynolds, and welcome to another live edition of Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. And boy, is there some business news today. Woo! What a drama happening over at NCB. By the way, if you're wondering why my set looks weird, it's because that TV decided to give trouble and is blinking and flashing lights like it's crazy. So I'm going to have to try to take it to the TV repair place tomorrow, see if they can fix it. But in the meantime, you know, we make things do. We've done this show without any TVs before on a completely black screen. So at least we have something. I see a lot of comments in the comment section already. This is a very, very hot topic. It is the biggest business story since SSL. So what a year for business journalism this year. By the way, did you see our Ask Mike discussion yesterday? Interestingly enough, we had pre-booked Michael Lee Chin for Ask Mike, our mentorship session, right at the time when all of these developments were happening. I did ask him on air if he wanted to comment on it. I didn't want to put him in an uncomfortable position and just, you know, drop the questions right so. And he said that he didn't want to comment at the time. We also invited him on to Taking Stock tonight, and he still says he's not ready to comment just yet. So hopefully we are able to get him on soon to clarify everything that's going on and his reasonings behind it. But we do have a very, very interesting show for you tonight. But first, back to Ask Mike. So 10 lucky persons were selected to ask billionaire businessman Michael Lee Chin questions they've always wanted answered. And it was quite the show. It's up right now on my YouTube channel, and I'd go watch if I were you and take notes. And let me know, are you a part of the Money Mission community? If not, what are you waiting for? Go to moneymission.mn.co or click the link in the description or the comments to join. Remember also to hit the like button, subscribe to the channel, and let me know in the comments where you're joining us from. We've got an amazing show lined up for you guys. So here's a look at what's coming up, followed by what's hot in business. And of course, come on, let's get this money. A major shakeup at Jamaica's biggest bank, NCB. Its top two executives have been sent on immediate leave, and Chairman Michael Lee Chin is cutting his own leave short to take over the reins as he complains about a lack of dividends. We'll get the latest updates and implications from business writer at the Jamaica Observer, David Rose. And the analysts weigh in on the latest market developments. What potential impact could the upcoming U.S. Federal Reserve meeting have on the international and regional bond market? And local economies are getting a boost from Taylor Swift and Beyoncé concerts. We'll discuss.
First, here's what's hot, brought to you by JMMB Group, your best interest at heart.
In a surprise move, NCB Financial Group has sent its top two executives on leave, while Chairman Michael Lee Chin takes over the helm. In a statement on Tuesday, NCB said CEO Patrick Hilton and Deputy CEO Dennis Cohen are going on 3 weeks vacation leave, but it adds that during this period, other arrangements will be made for carrying out their roles on an interim and then permanent basis. In the past week, Lee Chin has expressed that he's not happy with the bank's management and with the lack of dividends being paid to shareholders, including himself. NCB has not paid dividends since 2021. In June, Lee Chin had announced that he'd be taking a 3-month leave of absence from NCB, but he's now cutting that leave short. Meanwhile, Hilton and Cohen are speaking out on the situation. In a joint statement on Tuesday, they said they cannot sit idly by and allow their integrity to be impugned. The senior execs said their stellar record of performance speaks for itself. There's a new player in the cooking gas market. Fesco officially launched its new cooking gas product, FesGas, earlier this month. According to Fesco, it has tripled its production capacity since entering the cooking gas market in April. The company said it will be entering the commercial sector soon, catering to restaurants of all sizes and larger industries. FesGas is currently available in Kingston and St. Andrew, St. Catherine, Manchester, and parts of St. Mary through Fesco's distribution outlet in Stony Hill. The company said it plans to gradually expand to other parishes. The Trinidad-based Ansa Macal Group says it plans to invest more than $150 million in its Jamaican operations this year. Ansa Macal is one of Trinidad's largest conglomerates, with 48 companies ranging from financial services to media, real estate, manufacturing, and more. In 2017, the company became the majority shareholder in Berger Paints Jamaica. The company is on a mission to double its size and profitability by 2027. Ansa Macal's CEO said expansion in Jamaica is necessary to achieve that. The Bank of Canada last week raised interest rates to a 22-year high of 5%. The increase comes despite Canada's inflation rate being in the 3 to 4% range for several months. The central bank said it feared that efforts to return inflation to its 2% target could stall amid excess consumer spending. The Bank of Canada has raised interest rates 10 times since March 2022. Online fashion retailer Shein is facing a lawsuit claiming its copyright infringement is so aggressive it amounts to racketeering. Racketeering refers to a type of organized crime where illegal activities are used to gain profit. The China-based company is facing charges in the United States under its Racketeer Influenced and Corrupt Organizations Act, better known as RICO. According to the lawsuit, in an effort to create 6,000 new items per day, Shein used an overly complicated corporate structure to rip off designers. Shein responded to the lawsuit by saying the company will vigorously defend itself against any claims that are without merit. The company's also been under increased scrutiny over the past few weeks over forced labor claims at its Chinese factories.
What's Hot was brought to you by JMMB Group, your best interest at heart. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy.
All right, so before I introduce our segment, let me take some of your comments. Let me start with Michelle. Michelle says, the NCB series continues. Film, camera, action, money general. Sean is joining us live from Toronto. Lorraine says, this is concerning. Kish says, checking in from cool London. No heat wave as yet. Good for you, Kish, because over here, geez, we're dead in. People what are dead in. Antoinette, though, says temperature of 112 in Arizona for over 19 days, a low of 90 at night. This no normal. It really doesn't feel normal at all. Strong Link checking in from Upper St. Andrew. Zeno says drama. Lithium says my TV probably succumbed to the heat. You're probably right, Lithium Lily. Strong Link, business news explosion. Indeed it is. I'm getting calls left, right, and center to comment on this, comment on that. And same thing with my panel coming up in a minute. See, everybody wants us to comment because trust me, it is big. Rashane says, Kingston in the house. Kish says he did see the mentorship last night and it was awesome. Good Vibe says Portmore. Christine joining from Kingston 19. Veronica all the way in Cayman Islands. Where go? There it is, Cayman Islands. And Marla, St. Andrew is here. What is going on with NCB? Well, let's find out. There's been a major shakeup at Jamaica's biggest bank. That's National Commercial Bank, NCB. Its top two executives have been sent on immediate leave. And that's kind of weird because of the way how it's worded, but we're going to discuss. And Chairman Michael Lee Chin is cutting his own leave short to take over the reins as he complains about a lack of dividends. Business writer at the Jamaica Observer, David Rose, joins us to give us the latest updates on possible implications. We also have with us Keisha Bailey from Profit Jumpstarter, observer and commentator in her own right as well, market watcher.
Investor, the whole thing, yeah.
All of the above.
NCB shareholder, let me point that out.
NCB shareholder.
Everybody is at this point. Once you're selling GST, almost NCB shareholder. 40,000 strong.
We got to talk about it. And of course, I had to call you, David, and say, cause I always tease her how David always know. But you
always.
I have to know almost many things or everything just because
it's your job. It's your job. Yeah. You have been tracking the story and writing about this story between you and Dashan there at the Observer. You've been doing a good job covering the developments and what a bunch of developments there have been. So, David, this conversation is going to mostly be between me and you, and I
Yes.
ask her to chime in now and again, giving her, reaction and what she think is going to happen next. So, David, let's start with the latest news. Is this even the latest news? Because there have been developments by the hour today. The
Well,
last
BOJ put a statement
BOJ
out.
statement, BOJ statement was the latest news. So maybe we need to start a little bit before that, which would be the statement sent out this morning confirming that Patrick Hilton and Dennis Cohen, the NCB CEO and Deputy CEO, have agreed to 3 weeks vacation leave. And I'll let you fill in the rest of the blanks. What's going on? Bring us up to speed.
Well, right now we just know so far that, the two top dogs or top generals, to be more appropriate, have been asked to go on vacation leave for 3 weeks, and that, management is supposed to come in that same 3 week time frame. And to be honest, based on what I saw in that statement, it's quite concerning that it was said that they were supposed to have a meeting today, Monday, with the acting chairman, which should have been Professor Alvin Wint, surrounding their compensation. And, there was an emergency board meeting on Sunday, and then they were told vacation leave, then negotiating severance package. It
Is
just
that the
happened.
joint statement? Are you referring to the joint statement?
The joint statement, yes.
Because I haven't even seen that joint statement yet. Maybe
Nationwide posted it.
Oh, all right. So go ahead and talk while I find it, and I'll read it for the people.
Sure. So based on what they've highlighted, it was relatively sudden. No one expects this. We saw the article on Friday in the Jamaica Observer about Leach not being happy about not getting any dividends, talking about the efficiency ratio, asset tax, and these other things. And it's been pretty hard for him because he is not an executive of NCB. So the only way he gets paid, like every other shareholder, is through dividends. But since May 2021, they have not paid any dividends to shareholders. So 8 straight quarters, no dividends. And that's kind of hitting MLC because he has to deal with his own personal liabilities, in this case debts that are coming due in short order. And some of these debts that he would have taken out would have been secured by NCB Financial Group shares, and the dividend income was supposed to also service part of those loans, but there's no dividend to service those loans. So you see how messy the situation is, Kalilah?
Yes. All right. So I've found the statement. Can you guys read it?
We can read it, yes.
Let me read it in full. I meant if it's big enough for the viewers to read. All right, so let me read it in full for you. It says, ladies and gentlemen, this is a joint statement from Patrick Hilton, CEO of NCB, and Dennis Cohen, Deputy CEO. The statement was sent out today. This is the first I'm seeing the full statement. So far, I've only seen excerpts from it up to now. So it reads, ladies and gentlemen, we have noted certain comments in the media and wish to make some clarifying comments. In addition, we've been receiving numerous calls and queries from members of the media. Our first inclination was to ignore these comments, but we are being deluged with messages and phone calls from family members, concerned persons internal to NCB, in our loyal society, and from persons overseas. As you will appreciate, we are professionals who have carefully built our careers and our reputation over decades of service in the sector in general, and at NCB in particular. We have established a stellar record of performance over those years, which speaks for itself. We cannot sit quietly by and allow our integrity to be impugned by speculation and a misinterpretation of the facts and circumstances. Firstly, we have done nothing wrong where our compensation is concerned. All we have done is accepted payments as approved by the board, consequent on our surrender and return to the company of some $13.8 billion of shares, which we then owned free and clear in July 2021. The appropriate stock exchange releases were made at the time, and it was indicated that the company would be compensating us over time for this act of surrender and return of the shares. Earlier this year, we were asked to consider amendments to our compensation, which would reduce the quantum, and we made certain proposals in that regard. We were asked to take a look again, which we did, and we recently presented another set of proposals to result in a deferral of a significant portion of our compensation. The board requested that we look at further adjustments which would hit a particular target. We did so, and I verbally shared these proposals with Professor Alvin Wint, when he was acting as chairman. We were scheduled to discuss them with him on Monday morning. A special board meeting was held on Sunday, and we were subsequently informed by Chairman Leachin that the board had taken a decision to ask us to go on leave while certain discussions regarding a negotiated separation take place. We agreed to proceed in this manner. Like so many other persons, we have families, including siblings, children, friends, and professional colleagues. The feedback some of our families and friends have been getting from some of these news reports has caused them undue concern and distress. We do not believe this is fair to us or to them in all the circumstances. And that's the end of that release. Okay.
Mm-hmm.
Interesting. What do you make of that, David?
They're trying to really clear the air because a lot of persons do not understand that what is on the stock exchange is NCB Financial Group. But because the name NCB is in there, persons only look towards the bank and perceive that these gentlemen were literally executives of the bank and were separated. And that's not the actual case. So keep it simple. NCB Financial Group is a holding company. That holding company has 4 subsidiaries, but 3 main operating ones. You have Clarion Group, they own 50.1% of that. That's run by Ian Truran. You have NCB Jamaica, which is the bank we all love and know. They own all of it. That's run by Septimus Blake. And you have Guardian Holdings Limited, which is based in Trinidad, and that's run by Ian Shinapu. They own 61.77% of Guardian Holdings. So they are executives of the holding company, not necessarily executives on the subsidiary level. Patrick Hilton chaired the boards of GHL and NCBJ, and they're also on the boards of Clarion and other key subsidiaries. So when a person is asking, where were they sacked from, or where were they removed from, it's from the operating company level. They weren't necessarily executives of the bank. They were moved up to the group level back in 2019 after the Guardian transaction in terms of the majority ownership control. And I can understand the queries because for the chairman to go on 3 months leave in May and to abruptly come back, and for the 2 highest leaders in the organization to be sent on leave, and then a statement that says thank you for all the service and everything, it can be perceived that something went wrong internally.
Definitely,
And
because
that
even up to a month ago, when we had Mr. Leachin on the show, and I asked him specifically about the whole dividend issue and about confidence in NCB, and his response was that the company is still solid, and nothing compared to what the action that he took over this past weekend. So what changed in that period of time? And indeed, the statement that NCB said, even though they're saying it's vacation leave, let me share it with you guys. So you can see. No, I have it here. So this is the statement from NCB. Let me try zoom in so you can see it a little bit better.
Just press the arrow to the right, Kalilah, to get rid of the...
Yeah, man, I got it. Oh, it won't full screen.
Yeah, that arrow.
Oh,
yeah,
there we go.
There you go.
All right. So it says NCB Financial Group announces that effective July 18, the Honorable Patrick Hilton and Mr. Dennis Cohen have, by agreement, proceeded onto vacation leave for 3 weeks. During this period, it's expected that other arrangements will be made for the carrying out of their roles on an interim and then permanent basis. So that doesn't sound like it's supposed to be is really vacation leave, because they're already making plans for what's going to happen on an interim and then permanent basis. For the immediate future, Michael Leachin, chairman of NCBFG, will carry some executive responsibilities. And it goes on to thank them for their services, which sounds like a breakup, because this is normally the type of statement you put out when somebody is leaving the company, not just going on vacation. NCBFG appreciates the service of Mr. Hilton and Mr. Cohen to the NCB Financial Group over the past 19 and 20 years, respectively. During the period of their leadership, the group has grown to attain and maintain record levels of financial performance. The group will continue to benefit from its strong overall leadership team, while the financial holding company undergoes the above changes. That leadership team includes Mr. Septimus Bob Blake, CEO of NCB Jamaica Limited, who also oversees NCBJ's subsidiaries, Mr. Ian Shinapu, Group CEO of Guardian, and Ian Truran, CEO of Clarion Bank. And that's the end of that statement.
So I can bring in a different perspective here. So typically what happens with this level of senior executives, once they begin that separation process, it always almost starts with that vacation period, because it's during this time that, you know, a lot of the legalities and everything are tied up during that period. So you won't find them returning in office, but discussions are still ongoing around severance, because it started with that 3 week, then ultimately permanent move out. It doesn't necessarily imply that anything bad is happening within the company, but this is just the general practice that occurs because they're at a very senior level of the group of companies. And so they won't necessarily be able to just up and leave at the very minute. Things have to be discussed between now and then. But fundamentally, putting all that move aside, NCB itself, from a financial perspective, nothing has happened to that. NCB Financial Group, which is a listed entity, still very solid from a financial perspective. So when I look at it as an investor, my personal thoughts are, well, there is a restructuring happening, but is there something affecting the financials, right? No, not as of now. More will come, because it usually just starts like this. But as of now, nothing that's affecting the financial health of the company.
The subsidiaries, I mean, keenly.
Yeah, the subsidiaries. That's my take on it.
All right.
A lot of people, on the flip side of it could be, seen as, you know, the immediate vacation is there's some investigation that needs to be happening. So we're removing them from the desk so we can launch that investigation, because that can happen as well. But I don't see that being the case right now. I think it's just a move away so that the negotiations can happen.
So as you speak about negotiations, this is a hell of a negotiation. If you recall the statement that I read from Hilton and Cohen, referring to the $13.8 billion in shares that they were required to give up and now need to be recompensated. That's a whole heap of money. That's 90 million, almost 90 million US dollars that they would have to be compensated just for their shares that they gave up. That's in addition to any severance and any other things that need to be negotiated. So how would that impact the company, David?
So based on what you can observe from the NCB Financial Group financials, what you realize is that there are 6 listed executives for NCB Financial Group. Keyword, the financial group, and the subsidiaries, 6 key executives. You have Hilton, Alison Winter, Cohen, Dave Garcia. I can't remember the other 2 individuals right now. Those are the key individuals, right? When you go to the related party transactions for the individuals, in this case, with respect to related party transactions, it's for the company, meaning NCB FJ, the standalone business, $3.94 billion related to salaries and other short-term benefits. And when you go to directors' emoluments, for salaries and other benefits, you're seeing $2.33 billion. And only directors who are executives and would actually get salaries would be Mr. Hilton and Mr. Cohen. And for share benefits, you're seeing $1.32 billion reflected. So
that's for 1 year?
Yes, this was for 2022 financial year.
1 year salary, they jointly earned how much billion?
So between the two of them, salaries and other benefits, it's 2.33 billion Jamaican dollars. And for share benefits, it's 1.32 billion.
So 3-point-something billion together.
3.65 billion of total compensation, but for salary, it's just 2.33 billion alone between the two of them.
Just 2.33 billion.
So,
so somebody is asking you to explain the issue with the shares. Let me see if I can find back the comment. Somebody wanted to explain. Here it is. Good night, David. Can you explain the compensation issue regarding the shares valuing the 13.8 billion? So what happened there? Why they had to give up that 13.8 billion in shares? Do you know?
So back in July 2021, I recall when there was a share surrender between Mr. Cohen and Mr. Hilton, and it was was on June 3rd. Let me just bring it back up right now, but I believe it was related to, the compensation. They own these shares in their own outright, but they surrendered them to a particular share scheme. And let me bring up my article. So yeah, it was done at a transaction price of $145. This was done, and it says it was based on the change in the compensation arrangements of, Mr. Cohen and Hilton. So at the time, Hilton surrendered 61 million shares, Cohen surrendered 33 million shares, and he said that you should be held on a custodian for future, distribution to executives, which also included Hilton and Cohen. So they didn't explicitly kind of dig in and explain, what really happened. They just said there's a compensation change, but they didn't explain like why they had to surrender the shares, because it was just in their own individual names. So like I'm not sure like what was the major crux of that segregation of those shares, but they've highlighted it in their public statement that this was part of their compensation, which would have been paid out over time, because Mr. Hilton turns 60 next month actually.
So it seems that part of the issue that Leachind has been citing is the compensation package of these two gentlemen, saying that basically they're earning all this money while shareholders are getting nothing. And I noticed that they also addressed that in their statement, saying that they did nothing wrong. They only accepted what the board decided to give them. Is that the sense that you're getting, that was part of the issue, their compensation?
It's an issue, and to be honest, it looks like there's a lot of bad mind, Hilton and Cohen, like based on what I've seen privately and the vitriol that I've seen persons express, you can say there's a lot of bad mind, between a different set of individuals, big money, small money. There's a lot of displeasure, and when persons hear what they get paid, it ticks off some persons, but the reality is they compensated, the board signs off on it. And the thing is that the actual talent management and compensation committee of NCB is chaired by MLC himself. So he's one who has to sign off on their compensation as well. So it's kind of weird when they're saying that, they highlighted that they're trying to, talk about pushing their compensation further down the road. And the reality is they're overseeing a 2.1 trillion J consolidated balance sheet. So the compensation technically should reflect, that level of oversight, because NCB FG is not just in Jamaica or in just banking, it's in multiple sectors, multiple segments, and these are high senior executives who are there with the bank, which then morphed into a financial group. So if in this case, he signed off on it, it's kind of hard to hear him saying that he has an issue with it now. And he's the chair of the committee.
Yeah. Let's not forget as well that these gentlemen have presided over a period in which NCB has performed remarkably well. So it's not that they were bad at their jobs, quite the contrary, right. They're exceptionally good at their jobs. And take that into consideration when you're thinking about how much they are compensated as well.
Well, think about Kalilah. Remember that NCB was...
So I wanted to just touch on the payment structure, right? And kind of delve it. It is common practice. So always we're at the group level. So these aren't the executives of NCB, the bank that we see, it's at the financial group. So the contribution of shares over, it occurred around the same time there was that halt in the dividend payments. So usually what happened, it's referred to as a clawback, where these executives provide shares that will later be repaid to them. And what they're saying is that, we're offering these shares over to the company in the event of a crisis or any unforeseen things that would come to the company. We stand ready to use these shares to help to bolster the company, which is a sign of good faith from senior leaders. What would happen later on is that the company, when things get better, they would repay the executives, whether through shares or through cash. So that's something that's common. It happens all over the world. And so it's not anything too out there. It's something that's pretty common. And it occurred around the same time where we had that a halt in dividends and the BOJ was speaking about higher reserve requirements for banks and all that. So it was a move of good faith from the senior executives.
Not anticipating that a couple of years later,
completely this would have happened. Correct.
But the thing is, he's one who signs off on it, Kalilah. That's the thing about it. It's not
Right.
like MLC is on, Mars or, is in Fiji. He is there presiding in the board meetings and the one who also signs off on the compensation for, both these gentlemen alongside at the subsidiary levels as well. So, it's just odd. And the reality is NCB just coming from $175 billion worth of assets in 2004, when Patrick and Dennis kind of stepped in, 2.14 trillion now in 2023. So you really cannot negate the contribution that, their leadership would have done
Right.
over the years, because we're talking about NCB, which was, a group structure, this, that, fintech happened, and it was just chaos. And nobody wanted NCB. MLC stepped in and everything. Patrick would have been, the MD at FinSac, overseeing this whole process, and he came over, as the deputy managing director, and then took over as managing director. So, these gentlemen have done what they needed to do. The value has increased over the years, and the reality is, NCB has different times and different seasons, because when you had the 2008 crisis, dividends were drastically cut. But
Right.
we had never seen an event like COVID that, would have resulted in such an unprecedented move to cut dividends altogether. We have to put things into context. And one thing that, I didn't get to mention earlier was that this whole shift in terms of MLC, based on what the Nationwide reported about MLC coming on as executive chair, is reminiscent of SVL. And let me tell you why I say that. So remember in 2020, March 20, Anne Dawn Youngson was the president and CEO of SVL. She resigned on March 20. By March 23, 3 days later, Gary Perry becomes the executive chairman. So it's not something that is not unknown to our market. It's just the scale and size of the business that, we have seen this event, whereby the executives who lead the holding company are, removed, and an executive chairman steps in as the major executive of the group, and you have the subsidiary heads carrying out their specific roles for each subsidiary.
Yeah. What do you make of Leachin's admission to your colleague, Dashan Hendricks, there at the Observer, that he too was suffering for lack of dividend payments, and that's why he had to be selling all his assets? That really surprised me, because when we asked him on Taking Stock a month ago, he said he was just rebalancing his portfolio. And then now
but that's the same thing, though. It is the same.
He admits that but specifically he said he's rebalancing the portfolio to invest in these pet projects, the cancer research, right, and the
I think that
nuclear energy.
Clean energy, yeah.
And then now he says, well, he has to sell his assets to pay his bills because he's not getting any dividends from NCB, and he reportedly earns about $30 million from NCB in dividends a year. So big money talk.
So, but the thing is, investors, well, I can probably just add a little context before dividend. Investors earn two ways: dividends or capital appreciation, right? With the absence of dividends, if there are personal obligations that MLC has, it would be, no, I need to sell some shares to do so. Maybe it wouldn't have been his preferred means of getting cash flow, but still, nonetheless, he's able to still execute something. So in what he had said about doing a rebalance, still, technically and diplomatically correct there in terms of the response and the choice of words, but still it leaves room for him to be unhappy that he would have to resort to selling shares. His preferred way would have been, have dividends that have been accumulating, because from my calculations, on average each year, he would be getting north of 30 million in dividends from NCB had they been paid.
US dollars.
And to be going years without that, it can create that shortfall.
And remember, Kalilah, Leachin, would have borrowed against NCB shares for, some of his other businesses. So we should remember, NCB is the crown jewel that we all know is what brand Leachin is. But, he has Mary's Bank Coffee Factory, he has the Portland businesses, and he has different businesses that, he potentially acquired or, wants to expand. And he's always saying it, use other people's money. So, you'd have taken out debt, to potentially purchase some things. And, most time what you tend to see in the financial space is whereby once the maturity for the debt comes, you roll it over, meaning that you tend to refinance at the market rate, or try to extend the tenure of that debt, and you just keep doing that. And because MLC had the dividends from NCB FG coming in to support those payments, it worked. But now, with basically 2 years plus no dividends and maturities of some of these debts coming up, he's under pressure. And that's something that we all need to remember. While some persons might have accumulated significant amount of wealth, they themselves, want to increase their other ventures. But to do that, they can look at the cash they're getting from one business, or use cash from debt to fuel other business ventures. And nothing's wrong with it. But we're seeing now whereby that strategy is no longer feasible, based on the fact that NCB is a regulated institution, financial institution at that, the largest set of companies in the Jamaican market. So there are restrictions that will come up when you have these kind of black swan events.
But David, we've spoken about NCB and the whole dividend issue before on the show, and you are the one who explained to us about the new Basel III requirements, the new accounting standards, and how NCB now has to have a higher capital base. So that was, well, at least that's what you explained to us as the justification for not paying dividends. So is MLC being selfish now in insisting on this dividend payment when, as you explained, these new requirements are in place? Is it a bad thing for NCB to pay dividends now?
The reality is it's kind of complex, because here's the problem. You have these critical capital changes coming from Basel III, and for those who don't know what I'm talking about, this is a quick explainer. Yeah, we're currently, in Jamaica, we're currently operating under Basel II. Yeah, something called capital adequacy. Regulatory minimum is 10%. The way it is currently set up is that Tier 1 capital and Tier 2 capital are 4% each, right? Under Basel III, Tier 1 capital will be 6%, Tier 2, 2%. And under Basel III, you would also be required to add an additional buffer of capital as well onto, your financial entity, in this case, a bank. So as a result, what you've seen is, in recent times, NCB transferring some of its retained earnings to retained earnings reserve, and that increases Tier 1 capital ahead of some of the changes coming with Basel III. And in December, they would have transferred about $8 billion to that reserve. So I'm actually going to just confirm for you. Give me a second. So yes, $8.1 billion transferred back in December quarter. And even Scotia Group, they had to also, they also transferred some money on the banking level, in case Bank of Scotia Jamaica, to, that retained earnings reserve to improve the capital of the bank. And, they asked their dividends at the time from 35 cents to 25 cents. So Mr. Cohen and Mr. Hilton would have highlighted Basel III and IFRS 17 as the main concerns, and it is it's a relatively safe justification, because what we have to remember is that NCB is a systematically important financial institution. Their actions move the market, so they have to be at the top of their game, and BOJ will always be like, hey guys, what's going on? And that is another question that's come to mind, and persons and I have discussed. With this push to have dividend payments now, what will the BOJ's input be on the whole matter? Because BOJ is going to just sit back on the sidelines observing everything that's going on. They made a statement earlier to kind of calm the nerves of persons looking on, but the reality is, if NCBJ needs to retain more capital to satisfy these capital changes and also deal with increased expenses and so forth, is it a safe move? I'm not saying them pay a dividend to NCB FG to them pay us as shareholders is a bad thing. I'm just speaking more so from the general standpoint of what is coming and changing. And remember, interest expense has gone up and all these other things. I hope that makes a little bit of sense, Kalilah. And another thing that, persons tend to underestimate is that the money that they would be getting from Guardian Holdings to the holding company is not flowing up as normal as it would usually be. What I mean by that? So for those who don't understand, NCB Financial Group is a holding company.
Okay. David has
cut out.
frozen. We anticipated that this might happen every week, like clockwork.
I'm not sure it happened a while
there
ago.
he is. Okay.
There you are.
You're back. You froze for a bit. I think you froze again.
Big up flow. Big up flow. Big up flow. But what I was saying was that NCBFG holding company, they don't operate. They collect cash on the subsidiaries, pay liabilities, pay shareholder dividends, right? Similar thing for Scotia Group, Sadicor Group, so forth. So in 2022, NCB Jamaica, its subsidiaries paid $4.19 billion to it as a company. And then NCBJ itself paid $1.184 billion to NCBFG. When you check NCB Financial Group's standalone company statement, you saw where they got $1.23 billion from subsidiaries as dividend income. Now, when you do the math and look at the difference, that's $45.77 million that should have come from either Clarion, Guardian, or Link. Link is a startup, has gotten about $2.1 billion, to do its operations and grow. Clarion hasn't paid a dividend to date since acquisition, so that leaves Guardian. Guardian paid NCB Global Holdings, which is the intermediary subsidiary that owns the Guardian shares, 103.2 million TT worth of dividends. In Jamaican dollar terms, that is 2.35 billion Jamaican dollars. So think about it for a second, Kalilah.
But
Guardian Holdings paid $2.35 billion in dividends last year, but only 45.77 million made it to NCBFG's bank account.
And that's what I was about to ask, because Trinidad, as we all know, has issues with converting to USD to pay that parent company.
But here's the joke, Kalilah. In 2020, NCBFG, had a difference of $1.47 billion, that would have been the difference between NCBJ versus NCBFG, in terms of dividend income. And when you look at Trinidad, Guardian paid about $1.67 billion in dividends to NCB Global, and about $1.47 billion came to NCBFG's bank account. So this is what people need to understand. If the cash from Guardian isn't flowing up as normal as it should to NCBFG, you have a problem. So when you have, and remember, Clarion isn't paying any dividends, Link is a startup, which means NCBFG has to be taking all that quote-unquote burden, in this case, to be able to pay dividends to shareholders.
So let's come to the money question now, Keisha. And I see somebody asking, same thing I was just thinking as well. Who is it? Diane says, how will this development affect the NCB stocks? So Keisha, your perspective here, how would news like this, how would you expect it to affect the market? Because I'm thinking there may be two schools. One, those who are excited for the possible resumption of dividends, and then two, those who are concerned about the overall management of the company and where it's heading.
So we can look at it twofold ways, and just kind of coming in as me personally owning shares as well. We can look in the short term with the noise that's happening now, everything out, all the news releases coming out by the minute, by the hour, and we can look in the short term what is likely to happen. So today the stock closed higher, marginally higher, 0.38%. So investors are receiving the news favorably. That's what we can take from it. We'll see what happens tomorrow after people have been able to sleep on it. But so far, it's been well received today.
Well, I think part of that is because trading here ends at 1 o'clock. And so the second half of the news hadn't broken yet. So the early part of the day, the focus was on the dividend resumption and Cohen and Hilton going on leave. And then later on in the day, the rest of the news started breaking, and we had that reaction from Hilton and Cohen. And the market hasn't had a chance to react to that yet.
Right.
So we'll see how it
That's why I was saying tomorrow we'll see how that goes. So what we can glean from today is that investors want the resumption of dividends a lot. So we see that reflected in share price movement. Tomorrow we will see now the trading around a reorganization of the company. Are investors happy about this reorganization? I will see that. And that will likely continue for the next few weeks or so as more news releases come out. But when we step back from a long-term perspective, the number one driver of share price is fundamentals, the valuation of the company. You can't escape that no matter what. The company ultimately has to revert to trading on fundamentals, which is where I fall and I believe and I stay. I don't necessarily trade so much on the noise. I trade from a fundamental perspective. And has the fundamentals of NCB changed? No. The fundamentals of NCBFG, have they changed? No. Outside of increased capital requirements, which we know are coming, and the insurance regulation changes, which impacted Guardian, the hit has been taken. Most of it has been taken already, and we're going to see more. But fundamentally, NCBFG is still strong. So does this noise then create some opportunity for you in the long term? Because we know the company has to ultimately revert to trading based on valuation. After all the noise settles, I will move on to the next thing. Valuations are going to come into play. My take on it is that valuation is still very attractive. Where NCB is trading now versus what the company is worth, it's still very attractive. And that's where I just stay and say, yes, there is an opportunity in this from a long-term perspective.
Keisha, you know that NCB trading at below book value right now is book value is about $71.
Right. So sell out.
And you know, Kalilah, I know that I realized when I mentioned that whole cash flow thing between Guardian and NCBFG, like it took a second to process that. That's the part that people don't sit down to actually go through.
Right.
There's a process to actually get dividends. The reality is, if the holding company cannot get money from the subsidiaries, then there's no dividends to be paid out. So imagine if that income from Guardian last year flowed cleanly up to NCBFG. Might have gotten a dividend, probably two. But with that money restricted down in TNT, there's no dividend to come out.
But what about the money that NCBJ makes and contributes to the group?
Kalilah, NCBJ paid about, so NCBJ got some money from NCB Capital Markets, which is a steam engine of the group. But at the same time, NCBJ has to, you know, look at the environment ahead, not necessarily at the present. Because we've seen, you know, where last July 2022 increased interest rates on clients. We saw it again in January, and then we increased mortgage rates, you know, as of July. So I get the picture of, you know, hey, NCBJ, you know, has the potential to increase the dividends to pay up. But you have to remember, if you actually track over the years, you see that a significant inflow of capital up from NCB Capital Markets to NCBJ, which then goes to NCBFG, is then flow out to dividends as flow to shareholders as dividends. NCB Capital Markets has paid a significantly reduced amount year over year with respect to dividends. So to put it into context, in 2021, NCBJ got about $19.96 billion of dividend income as a standalone company. In 2021, it declined to $4.19 billion. So that's just to kind of show you that when the dividend income from subsidiary kind of slows down, it's not as easy to just push it up to the parent level. So it's a lot of, I shouldn't say gymnastics, but it's a lot of cash movements that you have to really look at to understand where the dividend is going to be paid from. So NCBJ can pay the dividend to NCBFG to pay shareholders, but as I keep reminding you, BOJ is watching in the background saying, hey, you guys do realize that, you know, Basel III is coming up. We deferred it from July this year to January, but it's still coming. So it should have been implemented this month, but it's been pushed back. Again, it might push back again in January, who knows, but they still have to prepare for that event. They cannot ignore it. Because $8.1 billion they transfer from retained earnings to the retained earnings reserve is the largest I've seen, even in considering the context of COVID back in 2020. So they are really preparing for Basel III heavily, and also accounting for the fair value losses.
Let me throw a question out there. What do you believe then would happen if no dividends are paid, but we have the share price moving higher?
That would be a
What
good
if
thing
we
for
have
everybody.
NCB going back to 200, no dividends paid?
Everybody's happy, including MLC, because that for one, the coverage in terms of the collateral from NCB shares, would improve, and on top of that, everybody will be making money again. The reality is that it's a
the
complex
lack of
situation.
dividends is one of the things tanking the share price.
It's a complex situation.
So
no, but Kalilah,
and then
no dividends.
we have
So
news
and the
that
thing
is
is
being
that
perceived as
people didn't.
Not right now, David and Keisha, we're having news that's perceived as negative, and that's likely to affect the share price. So I don't know what optimistic scenario you have in mind there, Keisha, with the price going back to 200, but
not necessarily 200, but it's gonna go back up, because what we're starting to see is a restructuring, the early days of that, right? And as time progresses and we get more and more releases, we'll see what the future will look like for NCB. So despite if we put aside the dividend, even though we know everybody loves the dividend, but if we put it aside, fundamentally, what is happening with profits? Because that's what moves the share price. If we look at the profit for each of the subsidiaries within the group, what is happening there? Are the profits growing? If they are, then we know then ultimately the share price is going to move. What's weighing down the stock now is sentiment around dividends.
Mm-hmm.
But once we have this reorganization, I'm hoping there's some messaging now around the way forward, what the new strategy will be. The financials will show that path of growth, which will push the share price. So it doesn't necessarily have to be payment on dividends, but still the fundamentals are still strong. And I know, right? It's not optimism. I see somebody put in a comment, yeah, Keisha is very optimistic. It's the analysis, right? It's the strength of the research, and just looking this, don't watch the noise. Watch what's really happening with the numbers, because you can't shake the numbers. They can't lie. And the numbers are showing fundamentals still strong. The noise is there, and it's open to interpretation, because we really don't know what's happening behind the scenes. The only thing we know are the numbers.
So what my little last
here. Yes, last comment, because this show is supposed to be an hour. I'm taking the hour on this one topic, but we have to. So last comment.
It's the big topic.
Right.
So I looked on Caribbean Jobs recently, and I saw where NCB was hiring for investment banking analysts in Georgetown, Guyana. And I said NCB Capital Markets, and remember, NCB Capital Markets, NCBJ, Guardian Life are the largest businesses in the financial space in Jamaica, and they have the largest insurance business in Trinidad. So NCB is in a very strong position to really leverage the transformation of the economy. They launched NCB Pay recently for using your phone to pay for transactions. So they have a very strong position to grow further, especially when the economy does significantly rebound and interest rates don't hamper a person's, wallets.
Oh, I thought you froze again. All right.
No.
All right. Thank you so much. Thank you, David. Thank you, Keisha, for that perspective. Woo. NCB is one that, of course, we're going to continue to watch. We've been tracking this story for the past few months now. Viewers, we are going to take a quick break. But before we go to the poll question, did you catch, ironically, our very first Ask Mike episode yesterday? A lot of information, a lot of gems were dropped. Here's a snippet of what you missed.
The best leaders in the world, they execute on their strategy. They execute. They just don't talk. They build a strategy and then they execute it. When a wealthy person once told me, Mike, you want to be wealthy? Yes, sir. Well, success is 1% strategy, 99% execution. Okay? And thirdly, the best leaders in the world are ardent, fervent, passionate advocates. Okay? Strategy, execute, and Lenworth? Passionate. Sorry. Advocates. Okay? so as not to forget it, Mr. Linworth.
Yes.
What's the first letter in the word strategy?
S.
What's the first letter in the word execute?
E.
What's the first letter in the word advocacy?
A.
So the best leaders in the world have a C plan. A plan for strategy, a plan for execute, and a plan for advocacy.
Very, very interesting, given the new context that we're now watching that information. So Michael Leachin last night on Ask Mike right here on my YouTube channel, mentoring 9 people on wealth creation strategies, giving his SEA strategy. How does that apply to what's happening now at NCB? S, strategy, E, execution, A, advocacy. Okay. So remember to join the Money Mission community. You can click the link in the description. It's also going to be pinned at the top of the comment section. Our next Ask Mike is going to be in October, and you can apply. So make sure that you're in that community so you know when so you get the notification early. Yeah, when the call for applications comes out. Right about now, we're going to your hurricane tip.
Hurricane tips are brought to you by CG United. It's good like that.
So here's your hurricane tip by CG United. Can you afford to replace all your prized possessions tomorrow if you lost everything? When a disaster happens, we often think of the building damage, but everything inside can fall apart too, especially if there's flooding, fire, or some other disaster. Your property insurance does not protect what's on the inside. Contents insurance is just as important as property insurance, especially at a time when everything is at risk because of natural forces out of our control. Contents insurance plans cover everything from furniture, equipment, and much, much more. In the event of a total or partial loss this hurricane season, you can be compensated for these items if you have the right coverage in place. And that was your hurricane tip.
Hurricane tips were brought to you by CG United. It's good like that.
And now to tonight's poll. We have to change this poll question, Madam Producer. This poll question can't stay. So I'm going to ask you to respond in the comments for now. And in the interim, guys in the background, producer, please change this question. Probably delete this question that's up now and ask a question about NCB. What are your thoughts on the latest developments with NCB? Do you think it's going to make the price go up, go down? What are your thoughts on dividends and everything that Mr. Leachin is doing? And we're going to post a new poll question very soon up on YouTube and on Twitter. What are your thoughts? What's your reaction to this news? How do you think it's going to affect share price? All right. And while you're at it, hit that like button. Up next, we've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, insurance made easy.
Hey moneymakers, join the KRM fam with our official merch. Get it now at KalilahReynolds.com. Let's get this money.
The JC Combined Index lost 4,500 points or 1% last week. 121 stocks traded across the main and junior markets for the week ending Friday, July 14, 2023. 50 made gains, 63 lost value, and 8 stayed the same. 139 million shares changed hands on the Jamaican dollar market, valued at $457 million. JFP was the week's most traded stock. It took up 36% of market volume with 52 million shares trading. The stock gained 5 cents to open Monday at $1.72. Trans-Jamaican Highway traded the second highest. The stock gained 27 cents to open this week at $2.76. And Wigton rounded out last week's most traded with 13 million shares changing hands. The stock gained 1 cent to open Monday at 84 cents. Now let's see who had the biggest gains for the week. Sterling Investments USD was the market's biggest gain, up 15%. The stock opened Monday at 2 cents US. Sagicor Select Funds, Manufacturing and Distribution gained 14% to start the new week at 63 cents. And Epley 7.25% preference shares was also up 14% to open the week at $18.52. On the losing side now, 138 Student Living Variable Preference was last week's biggest loser, down 15%. The stock opened Monday at $89.24. KLE Group fell 14% to open the new week at $1.53. And JMMB Group 7.25% was down 13, closing the week at $2.93. Over on the Trinidad and Tobago Stock Exchange, the composite index was mostly flat last week. Massey Holdings was the most traded stock. The stock gained 9 cents to open this week at $4.94 TT. National Enterprises was the market's biggest gainer, up 4% to open this week at $4 TT. And on the losing side, Trinidad and Tobago NGL fell 3% to open Monday at $17.54 TT. Over in the US, the Dow Jones and S&P 500 were up 2% last week, while the Nasdaq gained 4%. Motorists saw an increase at the pumps last week. The price of 87 gas was up $1.73, while 90 gained $2.23. Regular diesel prices were up $2.63, and low sulfur diesel was up $3.03. In foreign exchange, it took an average $155.56 Jamaican to purchase $1 last Friday. That's 11 cents more than a week before. Meanwhile, it took an average $118.12 Jamaican to purchase $1 Canadian. 1 British pound cost, on average, $203.45 Jamaican. And you could buy €1 for $176.54 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell almost 1% over the past 5 days, trading at $30,166 US on Monday. Ethereum, on the other hand, was up 2%, trading at $1,912 US on Monday.
Attention! Are you struggling with money? Trying to figure out how to pay off your credit cards? Are you ready to learn how to invest and grow your money? I'm Kalilah Reynolds, the Money General, and I'm on a mission to help you get better with money. Join me inside the Money Mission community, where I'll teach you how to manage money, make more money, and annihilate bad debt. Click the link in the description to sign up for your basic or premium membership. Let's get this money.
I took Kalilah's Investing for Beginners masterclass because I heard there was an IPO launching, and I just jumped right into it.
Help you to know how to invest and the steps you can go to achieve your goals as well.
If it is that y'all are interested in learning about investments or anything, I really suggest that you hop on that class, that masterclass, because the way that I look at money now and saving, I look at it different now.
Kalilah, you're the reason Merchant Brown started investing.
Learn the basics about stock market investing today. Investing for Beginners is available on demand or with a premium membership to the Money Mission community. Join now at moneymission.mn.co. The link is in the description. All right, now welcome back. It's time now for the analysts. Do we have an analyst intro? Kristen is supposed to play the analyst intro now, or you played it already? And the disclaimer. Or do I just go ahead? All right, so it's time now for the analyst. I'm joined by Andre Reed, senior trader at JMMB. Switching topics now from tonight's hot topic. Andre, hi.
Hi, Kalilah. Thanks for having me.
What a night, huh?
Yeah, I heard you guys having a pretty robust conversation earlier. Kind of thought at some point you may not necessarily need me for the rest of the evening.
Well, we have to have you on because you also have an important topic to discuss. We're looking at the potential impact of the upcoming Fed meeting, which is a topic that Keisha normally covers for us, but tonight you have it for us. What's going on with the Fed meeting and what impact might that have on the international and regional bond market?
All right. Thanks again for having me. So if I may, can we go back to as far as the pandemic, COVID-19, where central banks were forced to actually embark on easing programs. The situation was further exacerbated by the Russia-Ukraine war. And during that time, the Fed actually cut rates twice, and those were both unscheduled in March of 2020. I think the first rate was the adjustment was 1%, and the other one was 0.5%. So rates were basically at near zero during that time. At the consumer level, what had happened is that governments had provided grants and other stimulus, adding cash to an already fairly liquid system. Of course, most persons are already familiar with the disruptions that the pandemic would have caused to the supply chain, primarily on the basis that most persons wouldn't necessarily be able to move around as freely as they would have liked, and therefore leading to lower levels of productivity. Out of these programs, the easing programs, came the issue that we're faced with today. Too much money chasing too few goods. The net change in the price of goods and services consequently would have been adjusting at a faster pace than that would be preferred by central banks, aka inflation, right? Now, before March 2022, as I mentioned previously, US rates were near zero. Since then, the US Fed has actually raised rates a total of 10 times, which is an aggregate of 500 basis points, basic terms, 5%. They've only paused since then once, and that was last month at the meeting in June, right? As it stands now, analysts are actually predicting that at the next meeting, July 26th, there's supposed to be, it could be at 25 basis points, which is 0.25% increase, and then probably we will see a pause. But of course, the main catalyst in this puzzle is inflation numbers. Now, what has this really meant for the bond market? Now, bond yields are actually found using the risk-free plus a spread, right? Now, globally, the generally accepted risk-free is US Treasury bonds, right? The spread that I mentioned earlier is the additional premium that the market requires to take on an issue, whether it be a corporate or a government debt. These are due mainly from the credit rating as well as liquidity. Now, Treasury bonds have adjusted upwards in line with the Fed rate adjustments that I mentioned earlier. This therefore means that yields on bonds actually have been moving higher to keep the convention true. In some cases, you find that the risk premium itself had actually contracted somewhat, but overall yields are higher globally. It is important to note at this point too that there's an inverse relationship with bond price and yield, meaning that if the price goes up, the yield on a bond actually goes down. In the current scenario that we're experiencing, rising rates or yields, bond prices therefore have been adjusting lower, especially with those with less sound fundamentals. Now, on the domestic side, come back home to the Jamaica, CPI actually declined to 6.1% in May, the lowest that we've seen in almost 2 years, but still outside of the 4.6% US, BOJ target. It's expected that the BOJ probably likely keep rates current at 6% at the next meeting, I believe, on the 18th of August. The fundamentals basically, as it stands now, actually point in that direction where, they don't necessarily need to be as aggressive. But to come back to the original point that I'm focusing on the Feds, it's likely that rates are expected to remain fairly elevated in end 2023 into early 2024. The current predictions as it is now anticipates contraction somewhere around mid 2024, where probably at that point now the central banks probably may have to consider some other expansionary policies. As it stands, given the aforementioned, it's possible that bond prices probably may experience further, maybe not necessarily as aggressive, but further declines, right? Which means that prices are actually likely to go lower, right? Prices lower, yields higher. As it's during this time, there could be some amount of volatility, maybe not as aggressive that we would have seen in prior months or even last year, when most persons weren't exactly sure how to position their portfolio. So as a recommendation, what you want to look at is instruments with stronger fundamentals, where the ratings are a little bit higher, and they're sound where cash flow especially are concerned. Now, one of the questions that probably might come up is, what exactly are other options that the Fed could use instead of continuing to raise interest rates? There are OMO operations, open market operations, where they could actually, that really entails the purchase or sale of securities. They could also adjust the reserve requirements. So those fall with among the top 3 tools that central banks usually use. I rambled on a lot. I hope I've enough and clear.
Yeah. So what do we do now with our money?
Well, as it stands, and I think I mentioned it prior, that you want to invest in securities that have better fundamentals in terms of ratings, and I did also mention the cash situation, because what's happening now is that it's one of the issues that was created out of the banking crisis earlier in the US, right? Now, what had happened is that a lot of the banks had longer term assets on their portfolio that weren't necessarily repricing as fast as their debt obligations were, right? So at this point, I'd say until we get a clearer picture of whether or not the Fed is likely to go beyond 5.5%, you want to stay on the shorter end of the curve until things kind of level off. At that point, now you probably will want to look for longer dated securities, again with relatively sound fundamentals.
And when is that meeting expected?
For this month, July 26th.
Okay. Yeah. So we look forward to that. Well, Keisha is with us as well. Keisha normally chimes in on topics like this, but today, I don't know if you have anything to add, Keisha. You didn't plan to comment on this topic. So do you want to add something here or no? Or just go to your conference?
Yeah, Andre covered it well. So
okay, good.
Nothing to add. Hello, Andre.
And I see Richard says very clear and easy to follow. So thanks so much, Andre. All right. Well, before we go to the next break, Keisha, your conference is getting closer and closer. Right. How many weeks are we out now?
Less than 30. No, I think we're officially at 1 month out. The conference is going to be on August 19. It's called the Build Wealth with Real Estate Conference. You guys got to be there. It is, as it comes closer and closer together, like all of the excitement coming together. So grab tickets at profitjumpstarter.com/conference. It's going to be an entire weekend of discussing wealth creation, networking with other investors and other real estate experts as well. We're flying in a lot of experts. They're very excited. I'm getting a lot of calls about what they want to do. People want to meet. A lot of people are coming to make deals. So you have to be there to make sure that you are in the room when all these deals discussion, these investing discussions are going on, so you can partake in them as well. To register, it's profitjumpstarter.com/conference. Make sure you guys are geared up for that. We have some giveaways coming up too, so listen out for that, because bear excitement. It's going to be a really great conference. I'm excited about it. I'm looking forward to it. So can't wait for that.
Oh, Lanesra says, Keisha having a conference Where you been, Lanesra, for the past, 2 months? She's been promoting it hard. Go to profitjumpstarter.com and get your tickets, and we see you on August 19 at the AC Hotel.
Kalilah coming to, star up the thing and talk about interest rates in Jamaica.
I shall be there. Been planning my summer vacation. I'm like, we have to be back by the 18th because Keisha thing is the 19th. So yeah.
Right.
We're going to be there. Big things happening. Looking forward to it. Thank you so much, Keisha.
All right. Bye, guys.
This segment of Taking Stock, The Analyst, was brought to you by JMMB Group, your best interest at heart, and Profit Jumpstarter.
All right, let's come back with some of your final comments. And boy, did you guys have a lot of comments on this show. So let me read some of them. Let's go through some of them. Javon says, I understand there are issues surrounding NCB. However, Mr. Lichin might be a bit melodramatic in his approach to the situation. Stronglink says, the compensation of those NCB execs is unbelievable. They have got the money. The decline of the share price is of concern, together with no dividends. Who am I? Says, this news should be dropped on Sunday so that it doesn't shock the market. NCB needs a PR team. All this stuff should have buttoned up on Sunday, release Sunday night, and not get so drawn out into the week. I don't know if that would have made a difference because this news is so big. It would have been Monday morning news still, same way. Kemar says, this is getting scary by the day. Because by the way, Kemar, who am I? Journalists work 7 days a week. So if it drop on Sunday, it's going to be in Monday papers, no doubt, and all the Monday newscasts, Monday morning. Levar says, is it a good time to buy or sell NCB? I see a further decline in the stock. Well, we've discussed that. Kemar says, I'm about to move all my money from that bank and run. Nicole says, I need to quit my business and apply for this CEO position at NCB because nice compensation. Elaine says, top dogs eating all the food while shareholders getting breeze for dinner. Marlene says, I'm not concerned about Hilton and Company. They have enough cash to fund 10 generations in the future. They can use it to buy back their reputations. Ouch, Marlene. Kemar says, how are they getting so much money? That's crazy. And then he says, it's actually the best time to invest in NCB stock now. Crisis plus danger equals opportunity. Somebody was watching Ask Mike last night. Elaine says, MLC will correct NCB in short order. So Elaine has confidence. Roswell says, Mr. Lichin has other aspirations for other business. So it's logical to sell so he can inject that capital in his future company. Stronglink says, no, sir, too early to conclude that the news is well received. D says, Jamaican investors have delayed responses. So agreeing with Stronglink. Who am I? Says, stop it. No public company is obligated to pay dividends. And then you guys had some reactions to the money mission and the money general. Stronglink says, right, I think Cal join some army. Yes, the money army, that's what we join. And Elaine says, what soldier is this? It's the money general. All right, get on the money mission. We want to see you inside the community. So that is our show for this evening. It's been an interesting one for sure. Make sure you guys like the video, subscribe to the channel, share with a friend. Also subscribe to the newsletter, KalilahReynolds.com/newsletter. Remember that new email subscribers get a copy of my broker guide, among other things, and breaking money news, stuff like this, straight to your inbox. Turn on the post notifications so that you can be the first to see everything when it drops. We want to help people learn more about money so we can all get this money together. Follow me on Instagram, Twitter, and TikTok at Kalilah Ray. And follow at KRM_business news on Instagram. Remember, those are my only accounts. I do not have any backup accounts. You guys do not need to DM me every time you see some fake account. Is not me. I don't do crypto investment for people, none of that stuff. Just when you see it, report it. Most of the times what they do is they block me so that I can't report them. So you have to report it on my behalf. If you want to connect with the analysts this week, check the description box below for their contact information. You can also visit KalilahReynolds.com for financial information. However you like it, you can watch, you can listen to the podcast, or you can read the articles. Now tell a friend about taking stock because investing is the new sexy. Let's make it cool to talk about money. I'm Kalilah Reynolds. Thanks for watching and see you next week.
Let's get this money.